I trust you are all doing good. It's your host Aman and welcome to my channel. So if you are new here, kindly like the video, subscribe and turn on notification for more video like this and for others to see. Thanks for doing that. It's been a while and we are back and we're back fully. So basically here I'll be taking you guys on a step-by-step procedure, step-by-step walkthrough on how I frame my whole entire bias, how I frame my trades on CADJPY. Here, CADJPY trade. So I'll be taking you guys on step-by-step procedure, my thought process behind that particular trade. So grab a seat and grab a pen and stay calm and listen attentively and jot things down. So let's proceed. Whatever we are going to do in charts, in markets, what is essential and what's very crucial is you should check the higher time frame directional range. If you are bullish in higher time frame, if you are bearish in higher time frame, if you are ranging higher time frame, you have to check that first and foremost, so you'll not be trading pattern. What do I mean? Go to higher time frame, check if you're actually bullish, like higher highs and higher lows like this, or lower lows and lower heights. And I think lower lows and lower highs or something like that. So if you are bullish, if you are bearish, or you are just ranging, you are just moving through and fro like a pendulum motion, something like that. So yeah, basically you could see that in CADJPY on monthly time frame, you could see that okay, what do we have? Just go back and switch to your line chart with markers to see it very clearly. So what do you have here? We have series of movements to the downside, and we have an impulsive break of structure. This major break of structure to the upside. This is on a monthly scale, so you cannot really leverage on those past chart price action because you are moving towards like another month, another year, something like that. So this is actually on a monthly scale. So let's pay attention to the recent monthly level. So what do we have on monthly scale here? We have this movement to the upside, giving us a very solid break of structure to the upside. Yeah, we had this particular break of structure to the upside. This one here, this solid break of structure to the upside. That makes more sense, right? And you have another break to the upside. So this screams about break of structure to the upside, and this screams about bullishness in market, right? When there is much more momentum, when there's much more buying pressure in the market, you have more buyers in the market, that's a bullish market trend. And when there is more sellers in the market, that is a bearish market trend, right? And when there is equal volume of buyers and sellers, that's when we have a consolidation market, when everything is just ranging ups and down. So you have a bullish market sentiment here. You have a break of structure to the upside here, and you can see that okay, they are very much bullish in price. This are very much bullish in price. So let's just check back on our line, on our candlestick chart. You can see that okay, this makes more sense, right? Even here we swept the previous low, the previous liquidity low hand, and our first target is going to be this high. These are the external range high that we are targeting, and this extreme one, that's the targets we are looking at. So right, and if you could pay attention to this, you can see okay, this is actually what I explained in my last video, that okay, this is actually a single candle CRT on a monthly scale. A double candle CRT rather. So like you consider our candle as a single candle because they are of same color, they are bearish candle, and you can see that okay, the low of this candle has been taken out, and we are looking at to take this high. And if you consider this candle as a single candle, it's going to serve as a CRT candle, right? What CRT candle is all about. You swept the candle low, then you go for the high. So something like this is a candle, this is the low, and if you take the low, then you continue to take the high of the candle. That's what I mean with CRT candle I was saying here. So we took out the low of that candle and we closed above it after we took out the low, which is here. So let me rephrase what I said. I said this is a candle, this candle here, and this candle, we consider it as one because they are bearish candle and you can actually combine them as one, right? So here, combine them as one gives you something which is actually CRT candle. We've already swept this particular low, right? And we are targeting this high, which is quite alright. So but this on the monthly scale, and this will take a lot of time and a lot of days to complete all of this. So I'm just telling you how you can frame your own directional bias on higher time frame, right? So now take a look at this, right? After we set the low, we've confirmed that okay, we are now bearish on the monthly scale. So take a look at what we have here. We have a break of structure to the upside here, and we have a come back to hit. So now this is all on the monthly scale. So on monthly scale, we've already affirmed that particular thought process that okay, we are very bullish in price, right? We've confirmed that particular thought process, and we are already bullish in price. So now let's look for the lower time frame fractal structures. So on the weekly scale, what do we have? So we swept the previous low as well, and these are just the condition for the upside. So now I'm trying to tell you how I frame this entire bias. So what do we have here? This is on the weekly scale. We are still looking very, very bullish to the upside. very bullish. So now this is on a weekly scale. We have all of this. So this is actually a daily scale. This is actually on a H shaped key level, like a RBS, resistance broken, turn support. It sponsor multiple buys to the upside. So take a look at this. So this is an RBS. Just take a look at what we have here. So after that break to the upside, this candle that closed above, the second candle come and tap into it and still close above. Third candle still come and tap into it and start to pump again. So that's like a RBS, resistance broken, turn support. So sort of something like this. Sponsor multiple rejection, then eventually broke to the upside, then you continue the movement to the upside like that. So that was just what I'm saying. So here, let's continue from this RBS on weekly scale. So let's go to a daily scale after a weekly scale. See what I'm trying to say here. So on a daily scale, see what we have here. On a daily scale, we can actually just define that weekly RBS to this particular V-shaped key level here. Right, it's actually a V-shaped key level on a weekly scale. It's actually a V-shaped key level on a weekly scale. Just take a look at that. So this is a V-shaped key level on a weekly scale. And what do we have? We have a CRT candle. So like I said, like what happened on a weekly scale that I told you guys, we can still consider this as a single candle CRT as well. What do I mean? So this first candle here and this second candle here, you can consider them as one candle, because you know, if you combine them, they are going to form a single candle. Let's say we have a 2-day time frame in trading view. This is going to just be like a single candle there. That's just going to be a single candle sitting right there. So just go back here and let's continue. So after you've considered this candle as a single candle, you know, this is going to be the high of that candle and this is going to be the low of this candle, right? So which makes more sense, right? So sometimes, let me tell you something, sometimes there's something I used to say that, okay, when your POI cannot take out targeted high or low, then your POI becomes a liquidity for the targeted high, provided there is a POI below your POI. That sounds like a spell or like an incantation, which is not. So this is what I'm trying to say here. I said, let's say you have a V-shaped key level like this, that got broken to the upside like this, then you have something like this. So here, you know, you have to use this level to complete the cycle, right? Like this coming. This is what I'm trying to say. This is on the A shape. This is that breaker block model, and we have this liquidity level, right? And let's take a look at this. So this is the liquidity level we want to use to take this eye out, this external range eye, right? So, but all of a sudden, this whole movement could not take it out, like impossible to the upside. Then we have some sort of rejection from this particular region again, coming down again to the downside. So your POI here could not take out the targeted high. Then your POI becomes a liquidity for the targeted high, provided there is a POI below your POI. If there is no POI below your POI, then you anticipate a rebound of your entry. What do I mean? You anticipate a rebound from this V-shaped key level like this to take this external high out. That's a condition if there is no POI below your POI. Had it been there is another POI like this below this POI, let me show you what I'm trying to say. So this is another scenario, just pay attention. So let's go again. Let's say you have this is an A-shaped key level, then you have break, you have this, we have some sort of something like this. Before that break of structure, you have something like this. Before that break of structure, then we have this. So this is like this is what I'm trying to explain. Then you have another movement to the downside. So it fails to take this external range high out, right? Then you have some sort of movement like this to the downside. So there's high tendency we use this POI because that's actually another POI below your first entry. So this is your first entry. This is how your first entry is going to look like. This is your liquidity target, the week of that particular high, and this is your liquidity low, right? So the moment you know we cannot really take out this high out with this tapping here, so your POI becomes a liquidity for that low, the POI below that your POI here. This one point of interest below your POI. So this is what I'm trying to say. So that's what I'm trying to say in NSX, right? So take a look at what we have there. Just take a look at what we have here. So and you can still use maybe some sort of a trend line confluence and sort of something like this, sort of a trend line confluence to complement that entry like this here. So that's basically what I'm trying to explain here. So if your POI cannot take out the targeted high or low, then your POI becomes liquidity for the targeted high, provided there is a POI below your POI. Or if there's no POI below your POI, you anticipate a rebound on your entry that is like, yeah, some sort of a break-even stuff. Okay, now let's go back. Let me clear all of this drawing, and I think I have to just clear it manually. Yeah, which makes more sense. So just take a look at what we have here. Take a look at this structure here, this old structure, and this structure that happened here. They look alike, right? So here you see them quite often on your chart, and when you see them on air time, they are very, very strong. Just leverage eye on them. Yeah, don't let it go. Something like that. You know, there is nothing like A++ setup. Every setup treats it as if it's your last trade to blow your account, or as if you need it like with utmost like you just have to treat every one of them equally. Don't just say, okay, this is A++ setup. No, just make sure you look out for your things effectively and well. So what am I saying here? So I said this is actually the single candle, double candle CRT serving as one candle CRT. Like you have these two candles of the same color, bearish momentum to the downside, then you can consider them as single candle. Let's say you have a 2 days time frame. You could have considered that candle as a single candle, right? So we don't have a 2 days time frame, so but nevertheless you can still consider them as a single candle. So what am I saying? I said this POI that happened here, this KMR level on the daily scale could not take out that targeted high from using this as liquidity. Could not take this targeted high out. After it's tapping, it could not take this high out impulsively. So had it been took at the high impulsively, we could have started another range from this level, serving as a strong low or strong POI, right? So but eventually it's just come and use this A-shaped key level that happened here, that A-shaped key level, to move to the downside again. So this is the A-shaped key level I was talking about. Go back to the line chart and see it very clear. So this is it, right? So just use that A-shaped key level to dump to the downside, to just make sure it's turned that first POI to a liquidity zone for the movement to the upside. So this is what I'm saying. If your POI cannot take out that targeted high or low like this, after it's tapping here, it could not take this high out impulsively. Instead, it was just ranging here and start to dump again to the downside. You will know that the moment you are dumping here, your POI will become a liquidity for that targeted high. So that's what I'm trying to say. You see this most all the time in your chart, so just pay attention to them. So you can see that, okay, this KMR level just helps us to provide another liquidity level, right? So you could just say that, okay, now the moment my POI cannot take a targeted high or targeted low, then it becomes a liquidity for targeted high. So what do I mean? So take a look at this. So this is the liquidity created by that POI mitigation, right? So that's how I frame all of this. This is like a CRT candle high, a CRT candle low, right? Should I just let me just try to I'm trying to annotate or draw something. Okay, something almost like this. So it's like a CRT. It's a CRT low. Yeah, this candle here is a CRT low, and that's a CRT high. Let me just write CRT low. So that's a CRT low, and this is the CRT high. That's a CRT high. Yeah, that's CRT and that's CRT low. Just get familiar and follow the flow. Yeah, so take a look at that. Then we had this V-shaped key level. We had this V-shaped key level from a daily scale. So you can see that, okay, how do you know this is a V-shaped key level? Just go back to your line chart to see it very clear. So this is it. The V-shaped key level on a daily time frame. It still follows the overall trend. We are bullish and we are looking for a bullish bias, which makes more sense, right? So take a look at that. So a CRT high, a CRT low, super previous CRT high, close above rather, then you target that nearest CRT high, right? So take a look at what we have here. And mind you, there is still some sort of a trendline liquidity, trendline confluence like this. Yeah, so this is like a trendline confluence. Yeah, something like this. So take a look at that. All of this, some of these are actually random. They happen with one reason or the other here. So that's how these went. Well, let's see. Let's go on H4 to see. On H4, this is the structure that happened here. So we could just arrange this to this KMR level to make our chart looks nice. And let's move this here. to make everything looks nice. So now this is the daily time frame scale that we marked out, right? This daily time frame level that I marked out from that daily time frame, and this is CRT high that I marked out, right? So but let me show you something here. We can just refine this to the V-shaped key level that got created by that rejection in price. So this is the V-shaped key level. So let's just go back and use the V-shaped key level, which is this one here. So it's the V-shaped key level, right? So after that V-shaped key level, you can see that okay, that's that about that. So let's go back to our candlestick, and after we use that, so now we can actually use our line charts, our trend line confluence as well as more distinct to it, more confluence to this. So take a look at what we have here. So take a look at what we have there. Yeah, okay. Or should I use this? I'm coming. Let me use this rail tool to draw that. Yeah. Don't want it to get messy. Okay, let's use the normal line. Yeah, just take a look at that. And when your key levels are right, the momentum will kick in. That's just what the beautiful part of it. There is going to be a momentum push in that particular trade when your key levels are right. So just take a look at that. You see, okay, now where am I going to put my stop loss? How did I place my stop loss placement? Okay, this is it. So you put your stop loss below the protected low. Yeah, that week put your stop loss below it, right? So let's place the position to here. Something like this. So your stop loss is going to be below that particular week. Come in. Yeah, something like this. Yeah, but this is what I did. This is the ideal thing you need to do when you're placing your stop loss below that particular week. But this is what I did. I actually used the 50% of the whole week here, that happened here, and I placed my stop loss above the percent of the whole week. Something like this. That was how I was able to achieve the 10 trade on CADJPY, right? This is how I achieved that 10 trade on CADJPY. So this is actually what I did. My stop loss are below that particular 50% level of the whole week, right? So just take a look at this. This is beautiful, and this is awesome. I don't lie to you, because all of these things that we're looking for is actually in alignment with this, right? All of your criteria, your markout, everything you're looking for is actually here. That's basically what you're looking for. So here I dropped the insight on my Telegram channel. You can just check my my description in my video to join my Telegram channel, and on my page on my description, and also on my profile as well. You see my Telegram channel. You see, yeah, I drop this on my Telegram channel. You can just follow me on Telegram and on X to get to keep updated and to read some of my threads. So you can just go back and check those previous videos as well to learn one or two things from those videos I make before now. You know, we learn every day, and we will still learn to eventually leave this place, right? So that's basically the whole stuff. And also, let me show you something. This is what I'm trying to explain earlier on. When you have a V-shaped key level like this, right, and you have a liquidity zone like this, and it could not take this high out, then it sponsors some sales to the downside. That is if you are very sure you are trading with the trend and not against the trend. Then this is awesome, right? Just take a look at this. So if it has something like this and there is no other POI below this POI, then we anticipate a rebounce after this. Then it's complete the whole cycle to the upside. This is going to be a liquidity level, your V-shaped key level, right? So let me show you some charts as regards this CADJPY trade. I'm coming in a moment. This is the CADJPY trade layout. See, this is actually the V-shaped key level from the daily time frame scale, and this is the liquidity level that I marked out for that. See, this actually requires a lot of patience. It's on a daily scale and not on H4. So patience is part of trading. Knowing when not to trade and when to trade is part of trading as well. And not all trades are tradable. Just wait for the right moment to shoot. There's this saying that says an hunter with a single arrow, you always learn to shoot carefully, because you know, if you miss that arrow, I think that was the end for you. So you just have to wait for your right moment to shoot here, and not just to shoot anyhow. You see, market will always provide what you want to see for you. We just have to be patient and calm down to look at things in a general view and from a perspective you're looking for. So take a look at this. You can see that okay, this is actually that V-shaped level that we marked out here on a daily scale, and see that sniped entry, and this is this is the continuation of the trade. Take a look at this. This is the continuation of the trade to the upside. Yeah, and you see that's actually what I was talking about here. So here it makes more sense, and this is on Euro card. It's on Euro card. Here it is on Euro card, and same logic. CRT high, CRT low. Just join my Telegram link. The link is in the description. Just join up, and you see there's a lot of things you need to learn. Yeah, free materials, videos, content and analysis and insight. You see it, and also get to learn more. We learn every day, so sort of like that. So let's go back to TradingView, and yeah, let's proceed on TradingView. So on TradingView, you can see that okay, we have this. Sorry, moment. So this on TradingView, you can see that okay, this is CADJPY. Yeah, I'm coming. Now this is random. They happen for a reason. Yeah, so let's take a look at that. So this is all buyers, framing, entry and exit. Just know when to enter and know when to leave the market. So none of this is random. They happen for a reason. And also, it's not just magic, it's just logic. Yeah, just stay familiar, get familiar, and follow the flow. That's all. So thanks for staying to the end of the video. Do well to like and subscribe if you find this video helpful and insightful for others to join, for others to see and help the algorithm. So, and also you can also share to your friends and family for them to just learn and benefit from this particular video as well, and other videos that I made before now. And also join my Telegram, my WhatsApp, on X, connect with me on all my socials, and let's do more together. Have a wonderful weekend, guys, and have a blessed day. Bye.